Hi, everyone. I wanted to take a quick minute to talk about the Blockcircle fair value gaps and volume validation open source script that I just published. I really hope you all find it helpful. What it's doing is trying to address a critical problem with traditional fair value gap technical indicators where you're either inundated and overwhelmed with the number of drawings where it's showing you every single fair value gap that was filled and unfilled, and it's trying to identify where the support and the resistance levels are, and it's trying to help you identify the liquidity pockets there. But it's just too much information, and it's very difficult to try to draw that manually, which is quite a laborious exercise. So I hope that the script that you're seeing here is going to prove to be very helpful. It's completely configurable. So you see right now for Bitcoin on the 1 day that there is clear four different bearish fair value gaps that are marked in red, where the price rapidly was descending down and it dropped at such an impulsively fast rate that the candles themselves were not even touching. Right, that's how violent the crash was, and there's really so that's it. And there's only one bullish one that goes all the way down to 65K, and all five are unfilled, right, as of now. So one potential explanation that you can extrapolate from this is that you could see potentially the price of Bitcoin trying to push higher, and it's probably going to hit some resistance. And this could be potentially a good opportunity to consider de-risking or reducing your size if you have an open long, and or consider shorting if it's facing a lot of trouble trying to break through and trying to pierce through above this zone. Now, if you break above both of these fair value gaps, then obviously the next logical target that you would consider is around the 101,000. So, but you would configure this how you want. So, for example, you would just double click it and then go to your proximity settings, and then be able to say whether or not you want it to be only looking at 30% proximity. So instead of 50%, or you want it to be only 20%. So what that will do is automatically disqualify the 65K level as a bullish fair value gap, because it's outside of the acceptable bounds and the acceptable threshold that we've set. So let's switch it back to 50. Another thing that you could do is, if you want to be able to contain it to a more reasonable time period, you can set it to less than 500. You can also extend out the bars themselves. You can hide or unhide the filled zones. So you could also, if you want to, configure it to not be only Wicks, but you could say, I require every fair value gap to be filled in its entirety, from the entire close, right? So you could do that, which will create more noise, and which may or may not be what you're trying to accomplish. It just allows you to be a little bit more picky and selective of what you're looking for. So, or you just say, I'm fine with a 50% fill rate, right? So you would be able to do that quickly. And then also, you can have trend or volume based filters. So you say, I require an above average volume in addition to the fair value gap being filled. So everything is configurable here. And really you would be on your way. So you can use this for really any tradable asset. And it'll allow you to just quickly see where the gaps are. So let's take the S&P 500 and you look at the SPX. But this, because it's such a large extension, I would say we should reduce this and not make it so significant. And then I would also probably look at this on a smaller time frame. Then you'll be able to see what's filled and unfilled. So hopefully you find this helpful.